This is the Buried in Work podcast, where we share tips and interview experts to help you simplify estate planning and end-of-life tasks.
Welcome to the Buried in Work podcast. We feature tips and stories from industry professionals to make estate planning, your end-of-life tasks, estate transitions, all that more manageable. I'm Jared Rizzi. I'm your host today. We have a guest, Steve Wagner. He's a certified financial planner, CFP, and a certified exit planning advisor, SEPA, with more than 30 years in the business. Steve, thank you so much for spending some time with us on Buried in Work podcast. Really appreciate your time and expertise today.
Very happy to be here and looking forward to it.
I want to talk about the background and bringing you into this career. 30 years, you've seen a lot of changes. We know that every year, but between just the laws, the policies, what's available, instruments, everything is so much in flux. You've seen 30 years of changes. How did you get started? Where have you come from? And what gets you up in the morning when you're doing this every single day?
Well, I appreciate that question. I've always loved helping people, solving problems. And in the financial world, that is what it's all about. People come to us with questions about retirement planning and business planning and insurance planning, so many different things. And it really is a puzzle that needs to be solved and put together in the proper way for them. I got started way back in my late 20s. I got that certified financial planning designation that you referenced back in 1989. And then just a couple of years later, I started teaching adult education classes on financial planning at a local community college. They were Wednesday nights. The classes lasted for 3 Wednesday nights in a row. And at the end, the clients would fill out a survey and often ask for a meeting with me. And that's how I built my practice. That's been very fulfilling. I think providing financial education in a very discreet and non-rushed and good manner is a great way to help people and open them up for a very good long-term relationship.
I think that's wonderful. One of the things that we've been trying to do with Buried in Work, both the website, the podcast, give some information to people so that they can make these good decisions, make these better decisions. You know, we talk about being buried in work. We want to get out from under the pile. And I think that's something that certainly someone with your expertise can help people do when they're armed with that good information. You're based in California, right?
Absolutely. Ventura, California. And we have an office up in Ojai, California as well.
And so over the last 30 plus years, what have you seen as the people that you've been working with have been retiring? You know, I'm imagining you've seen several generations now kind of go through this and figure out what they need and how to button up their plans before they make these big changes.
Well, we've seen everything. Obviously I started young and obviously my beginning clients, most of them were very young, and now we're seeing them. We've all kind of aged together and progressed together and handled our careers. And now, they're looking at, retirement. And, it's a privilege and joy to have been with them for all those decades. And, it's funny, you mentioned 30 years. 30 years ago, there wasn't the Roth IRA. Now there is. And there's been so many other tax law changes that have affected, obviously, decision-making, as well as things in the economy. 30 years ago, interest rates were still very, very high, and they went all the way down to zero, and now they're moving back up again. So it's a fluid motion for sure.
Well, let's talk about those considerations. Everybody, we all exist in this context. We all exist. We can't escape the considerations that are around us. We can't really change no one of us can change the economy. But I guess when you're starting with a client, when you're starting to think about this process, what are some considerations, both from your time, as a CFP, as a SEPA, but also just the idea of being an educator and just having those initial conversations? What do people need to be activated on to make sure they're thinking about this in the right way?
Well, that's a really, really good question, because what happens is people get most of their information from a couple of sources, from, friends and colleagues at work, for example. They get kind of a very biased, maybe even incorrect opinion about what might be going on in the market or the economy. Or they tune into some of the, financial programs, which are really just entertainment venues.
Right.
And so they really have just kind of this very surface kind of money magazine cover view of the economy and the markets. And that can oftentimes give them the wrong direction. And they end up acting on emotion as opposed to getting information, education, and then making a decision based on 3 or 4 different options.
What separates somebody from that frame of mind? Because I feel like there's a lot of that in the culture, whether it's politics or economics. There's so much on that surface level. It's easy to feel informed in our social media environment or whatever. It's really hard to become the smart money. It's really hard to get educated in the way that you're talking about. So what would you say to somebody who is in that swamp of kind of mediocre information and is looking for some kind of ladder out and to get above? What can they do to get smarter as quickly as possible?
Yeah. I think that's a beautiful way of putting it. There's a saying that's been kind of going on now for the last 10, 15 years. People tune into the news, not for information. They tune into the news that they already agree with. And that's what's happened in our society today. And of course, that thinking can spill over into other areas where they have to actually sit down and think, educate themselves, and be in a position to make some good decisions. And so I think it's never been more important to have an unbiased, fee-based, in our case, wealth manager, financial advisor, whatever you want to call it, to be able to talk to and have these honest conversations. And I think it is also incumbent upon us in my profession to be direct, not to be like, the news media today, where we say what we think our client wants to hear.
Yeah.
We are financial doctors, and our job is to diagnose financial problems and provide the right prescription medication on a financial level. And that takes honesty. And sometimes it's hard to say some things to clients, but we've got to say those things. And I think that can help the client. And it may even be refreshing to them to get that kind of candor, that honesty.
I want to drill down on what individuals can do differently, and I want to get some specifics out of you, because even though we're not quite fee-based right now, this is still what we're providing over the transom. I do think it would be important to give people who are listening to this conversation a few nuggets that they can say, okay, I'm now smarter for having listened to Steve. But I also want to, you mentioned this metaphor of being a doctor, and I think about, I've had conversations with doctors who've had similar tenures where like, oh, I've been here doing this 10 years, 20 years, 30 years, and I've seen trends, I've seen changes, I've seen people, you talk about, as we all get older, people smoke less, but they weigh more, or all these things that are happening in our culture. What trends have you seen over the last 30 years? And if you're a doctor, what are people sick with now that they weren't sick with 30 years ago?
Well, they might be sick with complacency. Just as an example, most younger people, I would say, let's just go back 20 years. So if you were born, let's say you were born 30, 35 years ago, you've lived the majority of your adult life in a zero interest rate environment. Now,
absolutely.
Jared, you and I know that that's not normal. That's not healthy even. And so it's funny when I have younger clients come in and they say, oh my goodness, mortgage rates are 7%. That's ridiculous. I remember when they were 18, when I was 21 years old. Mm-hmm. So it's all relative. It's interesting. And that's where we're able to help individuals, is like give them, we'll go back and we'll show them a chart of what is inflation averaged over the last 150 years? What have mortgage rates averaged ever since there's been mortgages over the last 70, 80 years? And that kind of that education brings them back to reality and helps to refocus them. So that's just one little nugget that we've been able to share with individuals that have come in terms of, what we've seen in changes and given them a more broad and unbiased, and we think more nuanced and reasonable look at the present state of the economy.
Let's talk about two different families. I want to talk, because Buried in Work, a lot of what we focus on is people who are figuring out things before they make some really big changes, either
Mm-hmm.
for their own lives or for the lives of somebody who's, recently deceased or maybe deceased in the near future. Somebody who's these are the big changes, the irreversible changes. I want to talk about somebody who's, kind of focused on end of life planning, which is obviously a big share of what we do buried in
Sure.
work, but also that young family that may just be coming to this with that sense of complacency that you mentioned, because that, oh boy, do I feel that. In my gray hair, I'm a little younger. I'm only 40, and for me, this moment is a real, I've lived through almost exactly what you've just described, and it's a real challenge to shake up and be like, well, this could be different.
Mm-hmm.
It certainly has been. So let's talk about those two families.
Sure.
For someone who is looking at they're in their 50s, 60s, 70s, 80s, they're looking and saying, okay, I've been making these plans, I've been doing things up till now. How do you shake them out of complacency? What do they need to be focused on right now that's different than what they may have been absorbing and learning over the last 10, 20, 30 years?
Absolutely. So if you go back 30 years ago, even 30, 40 years ago, the average retirement might have been, 7 to 10, maybe 12, 15 years. People retired at 65. Many died by the time they were in their early 70s or mid 70s, maybe late 70s. So retirement wasn't very long. Well, you mentioned it just a moment ago. People have stopped smoking. That's a major contributor to the longevity that we're seeing today.
Mm-hmm.
You've seen it, and I certainly have experienced it. Clients living healthily into their 80s and 90s. I play golf every Thursday morning with a 90-year-old retired doctor.
And who wins?
You would never guess he's 90 years old. He hits the ball right down the middle. He hits it far. It's a remarkable experience.
Unfair, frankly.
It is unfair. It really
is. As a person who's never been good.
Every week. Yeah, he takes my money every week. But what is the lesson there? Okay, so one of the things we help people realize is, look, there's two major issues. If you're in your 50s and early 60s and you're considering retirement, there's two major issues. Number one is longevity issue, and number two is inflation.
Yeah.
And so opening their eyes to the need for planning, getting their financial data in a cash flow system, looking at what if scenarios. Hey, do you guys want to do a vacation every year? What kind of income would you like to have now that after working for 40 years or so, what would make you feel really good that you've accomplished something and you can go out and enjoy life, and we run those numbers out. And I'll tell you what, right now, my friend, that will stop any complacency, and it will begin to answer a lot of questions as to how they need to position their portfolios and how they need to think about a variety of other things.
But that's mostly an actuarial table, right? People are living longer, they're retiring sometimes earlier, they're more active. This isn't just, kind of punching the clock, through retirement. These are people who are going out and kicking your butt on the golf course and doing, they're living life.
Absolutely.
So it's a different quality of life that we're talking about.
It is. And so it's a more expensive quality of life in some ways.
That's the connection that I was, yes. And that's
Absolutely
harder to do.
It is. So people are going on vacations longer. They're playing golf longer. And I'll tell you another consideration. They're also having to support their kids longer too.
Sure.
We've got lots of clients who are giving money to their kids for whatever reason on an annual basis. So those are all considerations that, that we take, that we point out that they're not even thinking about very often, and then implement into a plan to help them see if it works or not.
Let's go to the younger family now. You've got, let's say people are getting married later and later. Let's say these are people in their early 30s. Maybe they want some kids. Maybe they don't have any yet. But you're trying to shake them by the lapels and say, hey, focus on this before you get too far down the line. What do you have to tell them?
Well, 100% become aggressive savers. Many of these young folks, for whatever reason, are still living at home, or maybe they're out on their own. Okay, you mentioned this is pre-marriage. So they're in a very good situation where, maybe they've got a good paying job. So instead of, running out there and spending every dollar that they make and looking good for, somebody else, really aggressively save. How do they do that? Well, max out their 401k plan.
Yeah.
Put money in a high yielding savings account as an emergency fund, and begin to create that hardwiring that is often lacking today with young people because, again, Jared, there's very little, if any, financial education in high school and even in college. So these are things that they've really got to work hard at forcing themselves to do right now. But if they do that, they're going to have that hardwiring that will help them in their 30s, 40s, and 50s in really building up the asset base that they need to take care of them and protect them when they're in their 70s, 80s, and 90s.
I'm Jared Rizzi. This is the Buried in Work podcast, and Steve Wagner is my guest. We're getting a lot of the core principles that we need to be better than, I would say, better than average here. I want to talk about two specific areas, Steve, that I know are important to you and the clients that you work with, but I also think that for anybody who's having this conversation on, they're going to understand that these are critical. Estate planning, and also about small businesses.
Yes.
I'd like to do estate planning first, if you don't mind.
Sure.
Which is, it's this thing that no matter where you are in your life, it can feel really overwhelming. It can feel like, even if it's something that you have to do, it sometimes feels like it's the last thing that you want to do necessarily is really get into that space. So what's your advice for somebody who either hasn't been thinking about this in a concrete way, or has been thinking about it and maybe has missed something obvious because they haven't talked to somebody like you?
Well, it is an important thing regardless of where you are in life. I'll just throw out a young family, husband, wife with maybe a couple of kids. They don't have very many assets. They may think, well, why do I need an estate plan? Well, maybe they
First
don't
of all,
really
you're
understand.
talking directly to me now.
Yeah, sorry about that.
No, it's fine.
Well,
it's just
listen
not
up.
very many assets. Huh? All right.
So,
all right.
Why does this young family need an estate plan?
Right.
Maybe they don't even own a home. Okay. So it's like, we don't have any assets. If something happens to one or the other, what difference does it make? Well, it makes a very big difference. Number one, estate planning for that situation is a large life insurance policy.
Sure. Sure.
Both, I'm sure both are working. So both should have a large term life insurance policy, spend the least amount of money as possible right now. Because you want to, obviously I just said, you want to save as much as you possibly can in investments and savings. So a large term life insurance policy is the kind of proper estate planning tool to use. But as you get older and as you begin to develop assets, and even as a young person, there's nothing wrong with having a will or a living trust. Why? Because again, people have the misconception that a living trust or a will is simply to transfer assets. So again, a client may not have a lot of assets. They may not think it's important. Well, there are other examples or other things that a particularly a living trust, conquers. And that is, for example, naming a successor trustee, naming a durable power of attorney for healthcare as an example. So there are many things that can be taken care of that if there's an accident, a problem. I mean, we just recently had a client tragically in his 40s have a serious motorcycle accident, and he wound up on life support. Sure. Well, because he had end-of-life language, which he wanted to exercise. He wanted to be taken off any breathing apparatus. His wishes were obeyed, and he peacefully passed. Had that not been the case, the expense and something that he didn't want to happen would have continued to happen. So it's a good example that estate planning is far more than just transferring assets.
And it's these kind of things that, you think about when nothing's wrong or when very few things are wrong, and it gives you that ability to make sure that your voice is heard when you may not have much of one to offer. It's a real scary situation that people can avoid if they do the their homework, which hopefully we can help a little bit with. Let's talk about small businesses. I was talking about the two other areas. I come from a small business family. I know that you deal with small business owners for clients. I think about the hoops, frankly, that small business owners have to deal with. It's very very intimately and emotionally aware for me, at least. What do you talk about when you're having a conversation? How do small businesses complicate or change the conversation if the person is a small business owner who's looking to make these developments?
Absolutely. Well, there's a couple of areas. So I'll talk about kind of the day-to-day first. A lot of clients will come to me and they'll want to start a small business or they'll have a small business. And so, we talk a little bit about, well, what is it? Is it a sole proprietorship, an S corporation? Is it some kind of an LLC? Have you spoken with and do you have a relationship with a qualified CPA that is going to help you, as you mentioned, I think correctly, going through the hoops? There's different problems that arise when you open a small business. People don't realize, for example, very often, even now, it's shocking to me, but they don't realize that, when you open a small business, you pay a self-employment tax, which is basically the other half of what you've been used to paying as an employee. You never realized that your employer was paying the other half of that. Now, guess what? As a small business person, you get to pay the whole thing. So, that's an eye-opening little, very simple tidbit that potential new business owners need to be thinking about.
There's just so many of these things that fundamentally change your relationship with the government, frankly.
Absolutely.
Marriage is one of them, but small business, I think, is almost as, maybe even more powerful. It feels like sometimes.
Goodness. Absolutely. Let me give you another example.
Please.
So let's say that you go into business and you go into business with a partner. All right. So you've already got a wife, for example, or a husband. So that's a partnership over there. But now you've created another hoop, another problem potentially, because you've got this legal partnership that's happening. So guess what? What happens if one of you passes? Well, with no planning, the surviving partner is now in business with the deceased partner's spouse. And I would say most people don't want that situation. So the solution there is a buy-sell agreement. Again, a qualified business planning attorney is someone that would be needed in that particular situation. And that easily, eliminates that negative ending. Everybody gets what they want in that situation. The surviving partner gets to own the business outright. The surviving spouse gets to be paid out, usually in the form of a life insurance policy. And so she's happy or he's happy, and the surviving partner is very happy, and the business can move on successfully. But those are things that people just oftentimes don't think about until the worst case situation happens.
And it can make every single thing more complicated if you're not careful. I certainly have a
surely. May I mention another issue with small business?
Please, yeah. I think there are a lot of people who come from this environment, and there's just you're either in a desert of information because you just can't find anything that feels germane to your experience, or you're at that fire hose where you're just like, this is so overwhelming. So please help us identify some of the wheat among all this chaff.
So every small business owner starts a business one day with the hope and the gleam in their eye and the goal of being successful.
Sure.
And ultimately, as we all age, because we do all age, life is just one big long line. We want to be at the end of that line, for example, not at the beginning of it, but we're going to move up in that line, and we're going to get to the point where we're going to need to sell that business.
Sure.
So, Jared, let me throw out a couple of astonishing facts. 80% of businesses that are put up for sale never sell. The other 20% of businesses that ultimately do sell, 1 year later, 75% of those sellers, those former owners, wish they would have never sold the business. That's astonishing. So you think there's this beautiful gem that you've built, this baby that has grown to a child, has grown to an adult in the form of a business. something that you loved doing, it ends up in regret and quite frankly, not being probably paid what the business is truly worth. So what is the problem here? Well, the issue really is that business owners are great at running their business and making money, but they may not be great at working on their business. In other words, making that business valuable and more valuable every single day, week, month, and year that they are in that business, so that at some point, the business is attractive to an outside, unemotional seller. And that's what business owners need to be thinking about. And that's what we're really working with our business clients on. Work every day to make sure your business is growing in value. Now, there are specific steps. I'll just kind of stop right now if you want to ask me a follow-up question on this, but there's some other information that I can provide that will help some in the audience to prepare their business for better chance of selling for what it's really worth.
Well, what I was going to ask, and you've anticipated correctly, is that's great, Steve, but I have to keep you on the hook here, which is how does somebody in your business help somebody sell theirs? Because that is, you've given us a great explanation of the problem, but I need to know where the solution lies.
Yeah. So the solution lies in one area in particular. So again, let me refresh a little bit here. You want your business to become valuable to a potential buyer.
Sure.
So how do you do that? Well, number one, you got to make yourself as the business owner irrelevant. How does that sound for your ego? Okay. But that's true.
Yeah.
Because when you leave, that business still has to be viable. And so one of the problems that we see with small business owners is they're micromanagers. They're in control of everything.
Sure.
They are the key person. They're the only ones with the relationships with all of their key clients. So guess what happens when they leave? This business might be worth zero in that particular situation.
Yeah.
It might be making several $1 million a year in revenue, but that number would go to zero if with what I just described is the case. So how do you do that? How do you change that? What is the solution? There's 4 basic areas that we ask business owners to focus on. And they're in the form of capital. So you've got your customer or client capital. In other words, do you have just one major customer, or do you have a nice diversified base of customers?
Sure.
Okay, that's huge. Then there's human capital, your employees. How qualified are they? Have you mentored middle management to become upper management, to potentially become owners of the business, maybe even buyers of the business? What about the structural capital? Do you have the proper contracts in place, insurance policies in place, other risk mitigation items in place? And then there's the all-important social capital that we get employers to focus on. You might have great human capital, but do they all work independently of each other? Do they like each other? Do they get along? Is there a team approach? So those are some very specific, what we call intangible areas that if all worked on from day one, or at least from now on, employers should never wake up one morning and say, hey, I'm going to sell my business. They should wake up one morning and ask themselves, is my business ready for sale? And then they can begin to work on some of these intangible areas and create an environment where the owner is dispensable, is irrelevant, because guess what? When that entity buys the business, the owner won't be there. And so he or she must be dispensable in order for that business to have a worth.
Whether we're talking about small businesses or estate planning or any of these contexts, it really is, there's this human desire to avoid succession planning, to
I'm guilty of that.
To imagine a world without us, right? And like that is really a challenge. You said it right. It's ego death. And I think we are in this position where accepting ego death helps you prepare for the other more permanent things that are out there. Hopefully, what I want to end on. Oh, go ahead.
Let me jump in there. Let me jump in there real quick, because I think this is you make an excellent point, And part of the problem is why we're afraid of succession planning, meaning us as owners of businesses, particularly for many decades, is that we haven't prepared for what's next. Okay? I mean, we've never gotten involved in any community activities.
That's somebody else's problem, right, Steve? It's the next guy's problem.
Exactly. And so we don't have anything to look forward to. So part of the thing that I've tried to do with myself, as well as with our clients that are business owners, is have that conversation now about, hey, what are you doing? What kind of charities are you involved in? What activities are you doing right now today? Because quite frankly, those are the activities that they have to look forward to. And if
Sure.
they don't have anything, then that's where we really need to fill in that hole, because that will prevent them from ultimately letting go from their business. And instead of being proud of what they've accomplished, proud of the legacy that they have left, they will hold on for dear life because you know what? They've got nothing else.
And that just fosters that cycle of resentment and regret. And it's,
yes, absolutely.
You're probably not doing anybody any favors at that. You're certainly not winning it. You're certainly not kicking Steve's butt at golf if that's if that's the cycle you're living in.
True.
Well, let me finish out with one question, which is, we talk a lot about what you need and what people should expect from their CFP, from their advisors. And so what I want to ask is, how does someone who's shopping for someone in your position, someone who's looking to hire you or someone like you, how do you know if what you got on the other side of the desk is a lemon? Because people don't always know what to look for. I think, we go through how many doctors in life. We're used to shopping around for doctors. How many dentists have I been to? Whatever. But this is and you mentioned the doctor reference, so it's stuck in my head now.
Sure.
But we don't. How does somebody shop for a good one of you? How does somebody know when they're being fed a line that's not necessarily coming from a place of real experience and wisdom? And how do you know the difference?
Good. I mean, good for you. This is a wonderful way to end the presentation. And I've had 30 plus years of learning to do it the right way. And I think at the core of everything is wanting to help people, acting and being with honesty and integrity. But again, those are just words. You've got to feel it as the potential client when you're sitting on the other end of the table. So how do you do that? How do you avoid the lemon, as you, I think, appropriately put in asking this question? Well, here's one thing that would kind of identify the advisor as a lemon, so to speak. And that would be let's say you're in the initial meeting and the first thing he or she asks you for is, well, how much money do you have? Okay. Can I see your investment statements? So this potential advisor hasn't asked anything about your family, your goals, what you like to do, what some of your challenges have been in life, what some of your successes have been in life. Because ultimately, that's the kind of advisor you want to work with, somebody who's holistic and means it and demonstrates it. Because this is going to be, this advisor that you choose, very much like a family doctor in the old days, you had that family doctor for your entire life. Well, it's the same way here. You're going to have this financial advisor for the duration. And this must be someone who truly cares about you, wants to get to know you, your family, your goals, your likes, your dislikes, your failures, your successes, all of those things before money is even brought up. So I think that's probably the best tip that I would give individuals. Work with somebody who demonstrates those qualities, not just asking, hey, how much money do you have?
Yeah. Well, I certainly feel empowered to go out and to go and shake the trees and see what falls a little bit here. So I hope people who have heard this conversation are also feeling that way. And I certainly hope that they see you and understand the example that you're giving of somebody with not just your experience, but also clearly a connection to your own kind of universe that you're living in. I don't see I don't know. I just feel that warmth radiating off of you as well, and I hope other people can appreciate that, however they're enjoying Buried in Work podcast. So, Steve, thanks for your time. I want to say also, we've just enjoyed this conversation. This is another Buried in Work podcast. We feature tips and stories from industry professionals like you who specialize in making estate planning, end-of-life tasks, and estate transitions, all of that more manageable. If you've enjoyed this podcast, please consider leaving a review, following us on social media, or visiting the website buriedinwork.com. And don't forget, podcast listeners, you can save 10% off Buried in Work's estate preparation package and games with code BIW podcast. Steve, thanks again. Been a pleasure.
It was our pleasure, and thank you for having us on.
Thanks for listening to another episode of the Buried in Work podcast. Remember, you can save 10% on our estate preparation package and games with code podcast10 at buriedinwork.com.